Alright, good morning everyone. Let me just check and see here if I'm live. Oh yeah, we can continue our market analysis. Just want to make sure that there's no music playing. So that, at least for me, music's playing for me, but not for you guys. So I don't want to get any copyright. After all, I am a very, very small channel. So I just want to make sure that I have things set correctly here. How was your weekend, by the way? Was it good? I know I did have a good weekend. And I'm pretty relaxed. I'm glad to be able to come back again and be able to do this for you guys, and to be able to do this as well for myself. I was very excited over the weekend, just trying to learn about, we're learning about drawn liquidity, and just being able to anchor yourself so that you're able to take trades into that direction. I thought that was pretty cool. That got me pretty excited over the weekend, and now I'm here. I just want to look at Forex Factory. What kind of things? I'm just about finishing up my analysis for the week. We got, okay, quiet day today, Monday, for U.S. markets. Tuesday we have CPI. Okay, Tuesday we have CPI. PPI on Wednesday. Very important week then. Thursday we got this stuff. So there's gonna be some excitement made. And Friday we have this. Okay. I don't consider Friday a very intense day either. So it's just Tuesday, Wednesday, Thursday. Very intense weeks. I'm just fixing this up here because I want to make sure I got this things correctly. I'll tell you what I'll be looking at. Still got this buy side, man. Alright. Just want to make sure they have little drawings as possible. Hang on, I'm gonna check it again. Sometimes it doesn't say whether you're live. Let's see, testing, testing. Okay, I did hear myself, so I think that's gonna be valid to the fact that I'm currently live right now. Come on, buddy. Okay, this. Let me do that. Okay. All right. So what for the day? So for the week, this is what I always have to update this to. Now we have a new weekly open. That's before this. Bearish candle. Okay. I'm really aiming for all this up buy side liquidity, but let's see here. So we have a failure swing or a failure breaker from this low to this high, and I'm anticipating for it to be filled as soon as possible the moment we opened up on Monday midnight, right? At Monday at midnight, I want this to be filled from wherever it is. It's from where it opened, from where it opened all the way down to these lows. But because we didn't do that, and I can show you why in a second, um, the price didn't tip down into sell side liquidity here, so it's going to be going up higher. So I anticipate that at least from Monday till Wednesday at 8:30 a.m., price is going to be going up bullish, right? Well, you just have to be a little careful because here we have failure swing, so we can just trigger up to these highs, make it a turtle soup, and continue selling. Of course, it's just a matter of time because I like to see these things unfold at a certain time. So again, like for example, this anticipate this to fail until Wednesday, but I would like to have failed this thing quickly to make this statement true. Hang on, I'm trying to see what the heck was I doing here with the 60. 60, we had a low, high, higher low, higher high here. So all this area so this whole price action from this high to this low, from this low to this high, has been balanced. See, because it was made with sell side delivery, buy side delivery. So this whole area is balanced. So the moment it opened up here on Monday, um, we would like to get out of this area, so it's already considered balanced in the higher time frame. But let's keep looking a little further. Right now, I don't see any good dealing ranges other than the one that we have from, I guess, open float. So that would be, let me look this up too. Man, okay, so this is what they consider open float, or the open interest below and above the market. So below this sell side, there's interest. Above this buy side, there's interest in the market for price to go up there or down there. But which one will it tap, right? In the matter of next week. In this case, I do think that we're going to hit the buy side liquidity of this range, simply because again we had that little mini price action inside internal price action where we should have seen price dip down to these lows as quickly as possible, but it's currently rejecting that. And I think now I can show you there is a liquidity pool here on Monday. Yeah, this morning actually. I was looking at price action, and we had these pre-market lows. No, I'm sorry. It was the lunch lows for London that were being reacted off. See here at 5. Friday, Sunday. See here. I'm sorry. We had the pre-market Asian pre-Asian session lows that were being used here. Notice that my markings are all messed up today. I'm so sorry about that. See, I make mistakes, guys. Pre-Asia lows, right? Let's take a look at CME MBS. See, pre-market Asia lows on Sunday. We had this low form that was left behind, and when price shot down here, notice that it didn't really tap liquidity, but for ES it did. So you would have wanted to anchor your fibs from this high to this low, get 25% of that, and get in on ES. But I'm looking for entries to get onto NQ, so that's why I Didn't. I just saw that this morning when I was logging in. Something I want to see too is the daily, how we've been reacting off that, because that's also kind of important. What is balanced, what is not. So let's zoom out a little. Oof. Wow. So Sunday. Um, we got Thursday. Hang on, guys. I don't think I can focus. I need a quick moment. All right, maybe I should just redo this stream because like I've been just saying things that have just been on my mind and just constantly fixing them. You're not really getting exactly what it is that I'm looking for here just yet. I'm still kind of updating here my markings. I've had a long weekend, okay, and I just usually Mondays I take a little bit of time to just catch up on my markings, try to see where things are at, try to do comparisons, intermarket analysis, all that kind of junk. And let's see here. There's a lot of lines. Okay. Did you see the S&T right divergence right there too? We got the low, higher low, low, lower low. trying to see here actually something. Let you. I also have marked down these London lunch highs, and look how they were taken there. Now, if we're gonna do some T study, notice that it was the same. You have a low, higher high, and low, higher high, or a high, higher high on both. Mm. 2710. You know, we did get out of 22710.7, 22710.7, 22710.5. We kind of got out of there. Just need to learn more what is going to happen here. So again, I still think price is going to go up higher. But let's see here. We got Asian buy side liquidity to look at, so I'll mark that here. We got Asia. Then we got AM sessions from that day. To Wednesday, 925. Yep, that's the ultimate high that I really want to aim for. I'm gonna anchor you up here. Did I say 2 p.m.? Okay. Quadrants, not projections. Something I find interesting is that this is the CFD market, US 100, and if we go above it, you'll see this high, higher high. But if we look at the futures market, see that it made like relative equal high. See that high or lower high? Look how it reacted. Okay, and then we had that low that we reacted off this morning. It's pre-Asian. We had a lower low. Sorry, higher low, and then a lower low on ES. But look at that again. This is CFD's lower low. You compare it to its futures counterpart, higher low. That's very interesting, no? Whereas if you're taking that SMT, aim for this buy side liquidity right from Asia, could have done a high, a high to a low, and then 25% is 2268.5. Let's see where this candle went here. 2286.4. Oh wow, look at that. So that's exactly what we're looking for. Nice little reaction. Right, 686. 40 handle stop loss. Something that's healthy. Then aim for these liquidity out there. So you would have been already tapped in to go up higher. So that's a good entry right there. Now, if we're already in this direction of buy-side delivery, what other ways can we get into this market to be able to, I guess, make money? Well, if we look at the pre-market session, so it's at liquidity, right? I would like for it to dip back down, kind of give us the same structure where it did a high, low, and dip into that, and then maybe have ES fail to make that lower low, and then anchor our fibs again, and be able to take on higher, aiming for the 25% level and keep going higher. If it's not going to do that, you can also do a thing where it's high, low, higher, high, take a type 1 dealing range, enter it on discount, keep going higher. In this case, however, we forgot to do one more thing too, and that is to look at what has been balanced and what has not been balanced. See that? It's going up higher. So at this time, I want to see these buy-side liquidity pool taken from, what is this, Thursday? So I feel like this is where we're going. Let's see here. Then we have, what is it, 924? Okay, so then we'll look at the 7 o'clock one, right? We have a, yeah, look at that. This buy-side delivery is balanced, and we'll keep until 10. And then notice, look, 905 came in, medium threshold, kept going higher. Okay. You could have also anchored your fibs, right? Your quadrants, make this a type 1 dealing range, where you end up going to discount, right? Below equilibrium. That's a continuation trade right there. Which are the trades that I don't feel comfortable usually in taking, because I blow myself a lot. But I mean, it's just a matter of understanding more, and hopefully I'll be able to get there one day. What else is balanced here? If we look at the, what's about to be 9:30, so let's see. I do want to bring in that low here. There it is, pre-market. Pre-market sell side, just in case. Right, to kind of have that slingshot effect again, where it dips back down, kind of shakes off the weak longs, and then make it have SMT here, anchor or fibs, aim for higher prices, right? Or we could also have time distortion, right? That could also be a possibility as well. So we just kind of want to be careful here, navigating, not be so persuaded into chasing this move here. Yeah, I don't think so at least. And we have 8. Excuse me. 8 to 8:30. We had a wannabe breaker. Let me move whatever this is. That's a little annoying. Yeah, let me move this. It's a little annoying, guys. Let me see here. See if I can lock you, and then I don't. Ugh. Okay. Okay, cool. That's kind of like the bias right now, I guess. So yeah, I was saying we had this breaker where it was like a high, low, higher, high. It's probably like a second breaker. It's there somewhere. And extend that, you'll see that what? We wicked above it, okay, showing signs of resistance. That's okay. Going back down, we wanted to treat it as a premium array. It's coming back down. It only went back down to touch medium threshold of this um, block. And then we expanded higher once, twice again. So there's your showcase signs of support. Came back down, traded above our premium range right here that's balanced. And then what? Traded as an inverse. Traded back down, wicked, send it up high. So it's about to be 9:30 in a couple of minutes. Then there's also what? There's also the. I'm interested in seeing what happened here. Okay. Let's compare this low 22,710.7, 22,710.7, 22,710.5. So that's a, yeah, that's a, okay. Consider that CME, CSL. So I just want you guys to take note that the more price is going up, the more it's leaving behind liquidity. Let's see how did that reacted off in the futures market, right? There we have it again, see? Low, higher low, low, lower low by 9:05. See that? 9:05. Low, higher low. Whereas CFD is low, lower low. Right? So you could have also done something like this, right? As soon as it closes above 25%, you get in, okay, hold, getting on to 50%, and then sign up higher. How high? I just said, let's see, I think it's going to go up to Asian buy side liquid. Oh, by the way, it's 9:30 Monday. Hooray! So let's see if we'll get up there today. Again, there's no news today either, so not sure if price will be reacting off like immediately like that. Let's see if there was another SMT divergence that we may have missed here. Look at these lows, higher lows. Yeah, lows, higher lows. Nope. I'm gonna have this wick down. Okay, at 9:40, we'll take a look at our opening range gap on the regular trading hours. Right now, let's take a look and see what price has been doing in terms of the opening range gap for the electronic trading hours, right? So I've been saying, you guys, there's this opening range gap that exists between the 3 p.m. close and the 12 a.m. open. So we have here open at midnight, close at 3 o'clock. Close right here. So what would you consider this? What kind of details show us that price would be willing to fill this gap? Well, we have a close to open. So we had a discount open relative to where it closed. So I would consider this kind of like a SIBI, and I would be kind of interested in treating these quadrant levels as like little steps to make it up higher. High, up to the Asian buy-side liquidity high up here. Okay. But since this is 10 minutes of a delayed data, look at how we're behaving now. See the same structure? Okay. Remember that gap that we saw earlier? Let's show it again. See, is that close to open? Okay. Notice how we filled that gap. Okay. But I really do think we're going to head up to Asian buy-side liquidity up here. That's kind of like I think where we're going. Let's keep learning about what has been balanced and what hasn't been balanced, right? So now it's 9:30. So now we have to take what we saw at 8:30 here. Okay, 8:30, so 9. You can notice that we have a high, low, lower low, higher high. What is that? I see that as I see that kind of like as a breaker. We had a high, low, lower low, higher high. So then where is the actual breaker? I would say it's like this one right here, this block, this buy side delivery. And we'll see if it'll react from there. Notice how the retracement is coming back down to shake off the weak longs. I still do think we're going to get up there. So that big reaction we had from pre-market Asia, remember the lows, lower lows that we were doing earlier? So the fibs would have to be anchored pretty wide from then. So that's why I'm assuming that we're going to get up there. Okay. And again, none of this should be taken as like live trades. You're trading at your own risk when you follow someone else's stream. Let's see here. So we have this delivery, buy side delivery, sell side delivery. Okay, so I'm gonna be highlighting our breaker, kind of like a level that you can use to get in to go out for higher prices. I like this. I like this a lot. We have 25 handles. Aim for higher prices up there. That would be very nice if it reacts up this breaker like that. But we also forgot about one more thing, and that's the 15U that we have. It's 936, so we'll do 915, 9 to 915. Higher low, yeah, higher high. So then we had this open flow interest from here, broke it, came back down lower. And now we're going to supposedly see higher prices, right? Hang on, I have to step out for a moment, guys. But I'll be right back. Let me see here. Ratio by side liquidity. Let's do party. There you go. Now I have to step off for one. Excuse me. Isn't that beautiful? I'm back finally. And let's see here what has been going on since my departure. So I did highlight that breaker, right? That was gonna supposedly take price up higher, but because that was the main goal, I was also kind of interested to seeing if it can get like another slingshot effect, kind of like an SMT on the sell side when it reacted off the CME sell side liquidity and the pre-market. So we'll take a look now, see what's been going on. Let's see, yes, we gotta take a look at its friend. Okay, we have a low, lower low, and a low, higher low. So this is good. I like seeing this. If it starts reacting bullishly from here, look at this big, you see this 25% dealing range? See this quarter level dealing range? That would be very interesting if it did that. I mean, there's nothing else that's relevant here unless you want to keep going down lower, right? See if we went down to previous session. I'm sorry, not previous session, pre-market session liquidity. Went down low over there. So this is the futures market, and it's dipping back down to the pre-market sell side. I would have already counted this as tab 2 because we have already reacted off it from ES. But there's nothing else here, right? Except for this sell side liquidity pool. And that's referring now from a different date, from a different week. So because I mentioned earlier in the stream that we would have wanted to see price go down lower as quickly as possible, the fact that when it was going up bullishly when it had opened, that still kind of puts me in that bias that we're probably going to head up to go to higher prices. And seeing that this is the last liquidity pool to react off from, and it's at a 0.25%, look at how it's reacting off there out of that quarter level. See that big bullish candle right off in that quarter level, and it's giving us hints of SMT, low, lower low, low, higher low. This could possibly be what it is I'm looking for to aim for that Asian buy side. There's a couple of turtle soups here that I like as well. For example, we got the low. Let's see here. Let me get myself set up here. That's a nice turtle soup that is reacting off this last sell side liquidity pool. Now we're going to come back down to 25% to keep going higher. So I keep calling it 25%, but the fibs are calling it 75%. So let me reverse that so that it makes sense. This is a good slingshot effect, the fact that we closed above the quarter, right? Now we just want to see a price dip down here to go up to higher prices, up to Asian buy side liquidity. What could make, what would be the certain adversaries? What would be the speed bumps or the blockages in the road that will make me want to reconsider this idea? Well, we have the aspect of time. The aspect of time being that the open float was from this low to this high, and we took it. But no, no. What I'm trying to say is that what could make it difficult to hold up there, right? Because the more time we spend forming highs and lows, the more we can start creating more buy side liquidity, more sell side, and the price can start to reconsider. I'm talking time distortion, where price just gets consolidated for an extended period of time, and it's just going up and down and just consolidating. With that, it can also be like creating new buy side liquidity pools and sell side liquidity pools, engineering it so that it can continue going at a different direction than what was originally intended. The best way I can describe time distortion is when, well, I don't know if any of you guys have ever worked retail, but when you work retail and you're a cashier, say that there's a huge line and you're the cashier, helping customers check out clothes. When If you're someone like me and you despise working at those dumb jobs, to be frank, you want to go as low as possible, right? So that you can be able to, uh, I guess, pass the time quicker in the sense that you're dealing with less customers. So you're going to be going at a different, slower pace. But here's where you, as the cashier, kind of have the power because you can go as fast or as slow as you want. So if you have a customer that you don't want to deal with because you know that they're a regular and you want someone else to deal with that customer for you instead of you, you would intentionally start doing things a lot slower. I'm talking scanning the items, pushing the buttons, letting them know they want to sign up for a credit card, that kind of bull crap. So that to me is how I interpret it when I was taught about time distortion. Right? There's a hand going in here in the marketplace, and it's intentionally taking price slower so that it's engineering buy side and sell side interest. The same way as a cashier, if they're smart, right? They will, and they don't want to deal with that upcoming customer. They'll just take things a lot slower so that they can deal with the present customer, and so that the other cashier can deal with the upcoming customer that you don't want to deal with. See what I'm getting at? It's like you don't want to deal with that mess, so you want to make it someone else's problem, so you'll go slow. Kind of like in the markets, they don't want to go for that buy side liquidity just yet. They don't want to go up there just yet, so they'll just consolidate it, right? And while it's consolidating, spending time, and while spending time is creating more buy side, more sell side, go down lower because it's not time for it to go up there yet. See, that's the time element that the stock market comes in, that makes it difficult for people to trust their models because it's based out of like retail patterns and stuff. So that's what I mean. That's what I'm trying to explain to you. Um, that's kind of like how I understood time distortion when I was first taught about it. So that could be a hindrance, if you will. We could have this idea of it going up to Asia, but it starts consolidating, right? That means there's someone else in this market showing up their hands and their presence, and they don't want it to go up there just yet. It could eventually, but just not yet. And that's the kind of aspect that I can't predict yet. Look at me, I'm just a small YouTuber, right? Like I'm just like I like it's not. It's just an idea, It's like I ideally I would have liked to go up to Asia. That's why you, as the money manager, the portfolio manager, has to reconsider the risks when things like that happen. That's why if you're trying to preserve capital, which is the number one rule. You want to be able to know how to deal with when that kind of stuff like that happens. Take a partial, leave some of it to leave some of it to run. And what I learned was that you have to consider things through the aspect of time. Like through this time, I'm looking at it this lens. I know what's balanced, and I would like to see this continue to be balanced until this specific time. Right now, the time is leading until 10 p.m. Okay, that's kind of like where I would like to see things get dealt with. Also notice that we close above the equilibrium of this daily range slingshot. Look at this too. Low, lower low, low, higher low. So now just in T. Okay, look at that reaction. Down, wicked. Okay, so this could also be our breakaway gap. So if we're gonna be taking this long here up to here, this will be our implied dealing range. So everything from this equilibrium lower, getting on a buy. Okay, buy would be fair value gap here, volume imbalance. This big fair value gap here. Now we have an inverse breaker. See that? But that could also act as support for price to go up higher. Okay, let's see here. What else is left here? We have 9:54, so we have a couple minutes left. The macro just started, so we'll be seeing price aim for liquidity or an inefficiency. So we'll see. Okay, so it's 9:30. Yeah. So we have a high low, lower low, right? So when it opened 9:15 and 1 second, it went that lower to make that low, lower, higher, higher. So I would interpret this as another breaker. If we go down into the seconds, we could probably see like the sell side to the buy side delivery that's balanced. So we have something like this going on right now too. We have from this low to this high to consider. Where is equilibrium? Below these old lows. Where is 25%? Oops. Where is 25%? Right here. Below this pre-market session. This is interesting too. Look at this. Sell side delivery, but isn't this a balanced price action too? So this would be very interesting to see its reaction, especially now that we're having the macro. Maybe dip down to this sell side liquidity pool, not spend that much time here and send it up higher because we also have this inverse breaker. Okay. We're about to reach 10 o'clock, so I'm gonna start updating my balance price range. So we have 8 o'clock right here. Okay. So my balance price range is this. We have a daily range from this high to this low. 30 minutes, we'll see the same thing most likely. Yeah. Okay, so everything's stacking up atop of this daily range over here. Okay, but what about the 15? We'll take half of this daily range. We'll start dealing with this. High, low, lower, low. Okay, that will be my 15 year. We got it like this, daily range here, low to high. Very soon to take a buy below equilibrium. but we also have this dealing range. We could see something like a turtle soup, break down these lows to go up higher. So price can intentionally still retrace down lower if it doesn't want to respect this balanced price range action. You can do this very quickly. Look at that, treating as support now. If we go back to the futures market, you'll see that we have completely filled that gap that I was telling you. Our opening range gap, 1 hour. Electronic trading hours. See that 3 p.m. close to midnight open? SIBI wick up and down on it. Let's see if we can do this on the 15. Completely filled. And I think we're going to fill it up again, going up higher. Okay. We have now that new hour where we have the 60U and 30U sharing this daily range from this high to this low. And then we have the 15U sharing the breaker that I was telling you guys about from this low to this high. So we're gonna see if price wants to respect that balanced price range that I was showing you guys earlier and see if it wants to take it to go higher, or if it doesn't, it'll probably go down here, take this as turtle soup, and then go up higher. But because this is more balanced, I do favor entering on the equilibrium side of things right here. So we had that dip down right now from it. It's balanced. And then we'll just see if that will be what's going to be taking us up higher to reach Asian buy-side liquidity. And again, there's no news today, so I expected things to be a little dull. Except for tomorrow. Tomorrow we have CPI, so there's that. Let me get rid of my CME sell-side liquidity. I'm very interested in the pre-market. Because of the way we reacted. We also did the same thing happening around the Asian session lows. So you see these lows here in the futures? This is CFDs. Low, lower, low. So same thing here. And now let's compare this with ES. You have a low, higher low. Let's go back to the futures market and see here. We have ORGs, but now let's take a look at the regular trading hours, see what kind of range we have here. Let's zoom out to 30 minutes, and then let's do something like this. Let's put you away. I'm saying this is not good, guys. Look at that. Very small opening range gap. even smaller compared to the one from Thursday. Way too small. Close open. Yeah, close open. Yeah, that. Anticipate high resistance liquidity rank conditions. Okay. What are other entries that you could have taken? Right? Other entries that you could have taken if we're going to be reacting up this low to get up to that buy side liquidity. Take your implied dealing range, and then we'll make a different color out of this. We'll make it yellow or something. See, we have equilibrium, so anything below equilibrium you want to buy. Okay, what are some good buys? We had that balanced price range. Okay, that fair value gap. We have, hang on, what's this? Oh, look at that, hello, higher, low. Okay, see this? Low, higher, high, low, lower, low on US 500. That's a good SMT. But which is stronger right now? NQ. NQ is stronger because of that relative strength. So because it reacted like that on this balanced price range, I do want to see these lows protected to go up higher. So what would be the entry here if we're still below equilibrium? So let's see, we have this order block that was traded to at the open, another order block. Okay, so let's see. Hopefully, I like to see these order blocks be considered as support. Go up higher. Okay, we're just about to escape the equilibrium, so you wouldn't be able to find any other good binds without this fair value gap. Look at that. Speaking of, I haven't marked out my first percent of fair value. Look at that. So we have 99.30. Where is the first fair value? I don't want to consider this one. I think it's going to be this one. Yeah, I think this is my first fair value right here. This low to this high. Let's bring it up to MNQ. See what happened. Let's bring it up to MQ and then set this. Low, high. Okay. And again, this is still showing this kind of price action because it's a delayed data. Let's see if this shows more of our recent data. %, which is in line with the 50. Not this, I need the white one. Yeah, 50% equilibrium. Once it closes above 75%, if you got into that equilibrium trade, right, set it to break even. Yeah, it's gonna take a while to get up there. And we don't even have news today either, so that makes it even worse. Okay, we're just getting above the daily range here, 75%. Want to see it ideally close above 22,766.9. And again, this is CFD, so and I'm using this so that we can track real-time price action because I'm not paying for the live subscription data for futures. It should be 10. It's 10:11 now. We're still seeing this daily range go up. Now it's updated. No, it's fine. I'm interested, right? If we saw that this was going to be the price action, right, and then we saw the balanced price range react off here, I wonder if because we saw a high to lower low, I wonder if we're going to be able to see something here in a second. So hang on 1 minute, guys. Let's go to, and then this is the balanced price range that we were talking about. Then we'll do something like this. This could be considered your type 2. And it would have been choppy, but I mean, that would have been a ridiculous stop loss right there. Let's do 15 handles. Heck, I think you can even do 10. Yeah, you could have done 10 handles right there. Okay, aim for buy side. Head up higher. Nice. 2.53. Yeah. Let's see here. Let me take a quick photo of that. Hang on, y'all. I really would like for you guys to see this. Don't get scared. This is still strong. And we're still aiming for this buy side liquidity here from Asia. Come on, Google, why are you like this? It's crazy. Alright, so this is that same structure. Remember what I was telling you guys earlier? We have that balanced price range on the higher time frame. We had SMT, right, with the high, low, and then NQ. What is NQ, right? ES made that. Ah, oh, let me get it again. Let's try. Okay, so we finally broke above that 75% level. Yeah, we did. So this trade idea, right, from yeah, from 15% EQ from equilibrium, could have been set to a break even now. I was really wanting it for it to go back down to the quarter, right? But because I didn't know until afterwards that we had this balanced price range. That was like delivery by delivery. Um, I thought we were gonna dip down lower, but because we had that, it was fair to anticipate that area being protected and act as support. Okay. So it's 10:16. We should be having a mini macro take place. We still haven't reacted off the opening range from 9:30 to 10. We're still kind of like in it. But hey, this is a good turtle soup because there was nothing else to refer to. Remember, this is a good turtle soup because this was the last referred liquidity pool before pre-market Asia, and I told you that I would already consider that being taken care of because it reacted off ES by making a lower low. But below that, there was nothing else to refer to except for that Wednesday. But remember what I was telling you earlier that in the higher time frame perspective, we were again forming that balanced price range action where it should have been filling low quick, but because it wasn't doing that, I really was aiming for higher prices. That made me turn bullish. That made me go against the narrative. So if we're only going to refer to up to these pre-market sell side lows, this would be a nice sell side liquidity pool that you could have entered on Turtle Soup. It would have definitely, Turtle Soups are hardest to trade with because you're kind of aiming for that low. But if you have yourself a nice stop loss and you enter in a buy stop entry, look at this. That would have been a nice return on your investment, no? We're talking 4RR. And then we have the reaccumulation on the 50 on equilibrium because we had this balanced price range action, treating it as support. Price dipped down a couple times there, but wicked it, but it didn't dive in there. And look how it's reacting off now. So again, uh, based on these entries alone, you would have already set yourself to stop loss break even. Okay, so there's nothing for you to worry about. If price comes back down here, I can just cancel the stream and say, you know what, my stop loss would have been hypothetically taken. No longer interested in taking the trade. Or, or if it doesn't, I'm gonna try to see if we can stay online to see if we can reach into this buy side liquidity pool. But I don't know, guys. It's already about to be 10:30. 10:30. What's your first presented fair value gap for this hour? I don't think I see one just yet. Oh, right here. Let's see here. Let's go back to futures. So I'm in Q. We're gonna do new week opening gap. See how that's been reacted off of. So, oh, look at that! Perfect. That new day opening gap. See that? Been a nice entry there in equilibrium as well. Okay, what else? Let's take a look at new week's opening gaps. Okay, definitely reacting up that low, that one. So this would be considered a dark pool. A dark pool is when, excuse me, you have a lot of new week opening gaps and new day opening gaps just stacked together. In this case, we have two new week opening gaps just stacked. So this area would be considered a gray pool. I'm sorry, a black pool. There's also the gray pool that's with wicks. Let's see here. The opening gap. Okay, we saw that. Are there any Asians? No. 12 a.m.s. Yeah, midnight gap. Look at how well it reacted off this gap right here low. See that? The low here of this gap comes to 22,917 and a quarter. The low of this wick comes to 22,16 and a quarter and 3/4. So now off like what? 2 ticks. Yeah, this is future, so it's 2 ticks. Wow. Made it higher. Pre-market, a couple of pre-market entry gaps here on top of the BPR. So we had this 1 and 2. Okay, we have a couple here too for the opening range. First percent fair value gaps. We have the one for today, I believe. Yeah, we do have the one for today. Then we have the lunch first presented. And then we should have some PMs. Yeah, that 1 PM here. Okay. Hang on a second, guys. Okay, remember we have our stop losses already set to break even. So let's call it like here, to these lows. And if you were trading, real life funds, you would have taken this out. Let's see here. Let's call this our stop loss to pay for commissions. Say we're in this for a full pull, right? Like you're someone that's super greedy and you want to hold for a full pull to put your profit objective, right? So you would have been holding, you would have set yourself to break even. You would have let yourself a little bit of space to pay for that commission. Then there's also the what you might call it. But if you were trading, I guess someone pretty smart, you take off some short. Excuse me. You get rid of some of your position up at these highs right here, high of the daily range. Now I do anticipate a retracement to 75% or 50% before it can go up higher. And we're also in high resistance liquidity rank conditions. So what do you expect? Things not to be so direct. Okay, 1029 now. Let's see if we can update this. We can update this a long time ago. So we have a 930, no 930, excuse me. 45 to 10. 10 to 1015. We had this balanced price range from this low to this high. So we'll have this here. Up to 930. See that? Where it's wicking? Let's set our high. Here's 22,756.9. Close here. 22,750. Close 22,758. Okay, 56. It's about two handles that we opened at 22,758. They're two handles. So we just wick down there a little. I mean, I'm not gonna blame you. Mondays are not really like ideal for you to take a trade, but if you wanna. Okay, it's 10:30 now, so we have that new range going on now. 10 to 10:15. Okay, low high, higher high. So I'll consider that like a little mini breaker. Treat this as a premium array. I do think we're going to trade above it and treat it as support to go up higher. And then we have 10, 10, 30. We have this. We have this high to low price action and low to high that was met with sell side and buy side. This is balanced. Up till 11, this will be referred back to. This will be referred moving forward to. And so that's why we were thinking it's going to go down here. Be wicked, treat it as support, bounce off it, and treat this one, this little mini balanced price range that I was telling you about. Treat it as a breaker, not just treat it as an inverse, and then go up higher. Sorry, I'm just very into this thing, okay? Sometimes I get messed up in my wording. The most it can do, and if it hits down here, it's a stop loss out of the straight. Okay, you'll notice that also matches with the 50% equilibrium level here, right, to go up higher as well. you have to be okay with it because sometimes smart money may not want to take it up to ancient highs right away. Like I was telling you guys earlier, it could be creating time distortion. This whole thing could be time distortion, so that it can get to it at a later point and kind of just shake out those weak longs so that you can unseat them, take your position, and then go up higher. Also, been streaming for like an hour and a half, so I think I'll give this like 10 more minutes because that would have been it for me. What is your silver bullet? You see right here, which I believe is also the first percent of fair value gap. Yeah, traded here at support, and now it's coming back down. Traded as premium, but down lower. I'm also in favor of treating this as like a turtle soup, where it trades down to this low, only for it to go up higher. So on our implied dealing range, we're going back down to equilibrium. See that? We've also left opening range. So if it comes back up there again, it had just generated a new sell side. Yeah, actually, yeah. Because, like, again, no news, new week, and then high resistance liquidity. Does that sound like a condition that you want to be in right now? That you want to be involved in? Where you enter into a trade and it's constantly going up and down, back and forth, not reaching to your price action speedingly? That would just mess up with your mind now, wouldn't it? I'll make you feel like, dang, I thought my pattern, my pattern will manifest. I thought it was going to take me up higher quickly. Or this is getting too much. I'm getting too much drawdown. Or even worse, if you're like in an options trade and then it's taking a lot of time, and then what? Your gamma? Was it? I think it's the gamma. Gamma's eating up your contracts. Like it's losing money as time is going forward. So are these conditions that you want to be trading in right now? I'm asking you as the viewer. I know for me, I think I would be, but I would be scalping. I wouldn't be doing anything crazy like holding it for long term. This I would still consider like a day trade, to be honest. But even with scalping, you're still entering in the market many, many times. And what if your price reading action sucks? I mean, I still consider that I suck. And if I feel like there's no way I'll be getting in and out consistently. That's how I've been blowing up accounts left and right. Just get in. It's going up, I gotta buy. Now it's going down, I gotta sell. Or it's going down to get more accumulation, so I'm gonna buy that old low. And I get myself handed to me. So first trade would have been turtle soup down to pre-market sell side. Second trade would have been this equilibrium from this high to this low dealing range with the addition of the balanced price action. So taking this fair value gap low to high, it's also liquidity, go up higher. Now, if I was the teacher himself, I mean, he has confidence to like get, you know, as soon as he gets back on discount, he's buying more. I I don't know how to do that yet, guys. I don't have that kind of confidence just yet. When I mean confidence, I don't mean I don't have that ability to read price like that yet. I mean, if I was a cowboy, I mean, sure, like we have this order block, let's go. We're under equilibrium, support, stop loss, keep going up higher. We also have this type 1 dealing range, set on OTE. There you go. Go up higher, let's go. Stop loss is down here. See here, there's a couple of entries. Couple of S&Ts. How do you think have you been feeling if you weren't able to read price just yet? Look at this. High to low, low to high. Oh, that's S&T. Let me get in a sell right here. Fair value gap, right? Nope. And then I've seen posts on Reddit. They're like, why is my trade failing? Can't just be getting in on any S&T. Has to be aligned with a perspective that's picking up from the higher time frame. And that took me a while to learn. I'm still learning right now, actually. All right, I'm gonna have to let y'all go. Um, Again, high resistance liquidity run conditions, OTE entry below equilibrium. The 69 level was down here. Would have been a nice reaccumulation buy. I would like to see these lows be protected because of that balanced price range. And overall, this low for it being turtle soup. So I do think that we're going to end up going to Asian buy side liquidity, but we'll take a mark. I'll see if later on in the day it triggers my stop loss, my hypothetical stop loss down here. If it did, then oh well, I'm going to let go. Not, then this is where it's trying to go, but it's just struggling. So I'm gonna have to pause the stream here, guys, because it's getting late for me, and I gotta do my thing. So I hope you enjoyed the stream, and I'll catch you in the next one.